Profit X, NIO Stock Analysis and Surging EV Stocks to Watch, Part 2. My name is Ben, and I'm a lawyer turned real-life investor, best-selling author, and the CEO and founder of the ProfitProphet Trading Group in Silicon Valley. And in this video, we are going to continue our NIO Stock Analysis and find the best EV stocks to invest in using the powerful tools, concepts, and resources real-life traders and investors use in the real world. Now, if you haven't seen part 1 of our NIO stock analysis, please click the link before you proceed to part 2. In part 1 of our NIO stock analysis, we learned that 2 stocks are the driving force of the EV industry, NIO and Tesla. Furthermore, headlines are increasingly driving share price with 2 objectively reasonable, yet conflicting narratives, one bullish, one bearish. These headlines fall in 2 camps: financial headlines and political headlines. The financial headlines, objectively a more reasonable consideration for the stock market, focuses on the fight for EV market share within China, the US, and abroad. The financial headlines seem to be driving long-term share price movement, more specifically bullish long-term share price movement. The political headlines, although impactful, are rather emotional and fear-driven and seem to explain the short-term to intermediate-term volatility in share price. More specifically, they focus on global politics and domestic politics within the US. In this video, part 2 of our NIO stock analysis, we will look into the future. We will look at the driving force behind long-term share price movement, the financial story. And to the delight of bulls, the long-term share price story seems to be a rather positive, bullish story. With that, welcome to the ProfitProphet X, where you will learn how real-life traders and investors actually make trading and investing decisions, pounce on trading and investing opportunities, and grow and manage world-class stock portfolios. So hit the subscribe button and click on the notification bell to make sure you don't miss any of our content. All right, let's get into it, stock traders and tradettes. In November, NIO's CEO stated, "We achieved new record high quarterly deliveries of 12,206 ES8s, ES6s, and EC6s in total in the third quarter of 2020. At the time of those statements, NIO was trading in the $40 to $50 share price range. At the same time a year before, NIO was trading at about $1 to $3 per share. That's about a 40x increase in share price in a single year. That's astronomical growth. So what's the cause or the catalyst behind that growth? NIO started generating gross profits for the first time in June of 2020. That's fairly impressive for a young startup. What's more, NIO revenue hit all-time highs in Q2 and Q3 of this year. And if you take a look at NIO's stock chart, you'll see the NIO share price broke through its most significant line of resistance. When? June of 2020, the same month NIO started generating gross profits for the first time. Once share price breaks through a significant level of resistance, that price level may be considered a strong line of support. And NIO hasn't come close to testing that level of support. Instead, the stock continued to rise, hitting the $50 level in November, a common price level that acts as resistance regardless of stock name. So we know NIO is generating gross profits, raising revenue, and delivered about 12,000 vehicles in Q3, a 150% year-over-year increase in deliveries, and exceeded guidance by over 1,000 vehicles. And all of this is playing out on NIO's stock chart as upward momentum. In fact, NIO has been in a long-term uptrend, bullish uptrend, since November of 2019. And that lower trend line hasn't been tested since May of 2020. It's been parabolic growth for months now. What's more, most of the buying volume occurred below that $14 price level that now serves as support, meaning investors who purchased shares at or below that level saw incredible profits once the stock reached the $50 resistance level these past couple of months. profit taking naturally occurred, as we can see by the increase in selling volume. And it should. So it's no wonder that share price is taking a bit of a breather. You would expect to see the selling volume to have surpassed the buying volume with the profit taking at all. But it hasn't. Buying volume continues to greatly outweigh selling volume to this date. Just take a look at the balance of power on the stock chart. Systemic buying started in January of 2020 and hasn't stopped since. In fact, the balance of power indicates increased systemic buying since October 2020. Meaning, although share price is fluctuating a bit over the last few weeks to a couple months, the buying power or volume remains impeccable. Spurring on the buying in part was NIO's battery announcement. The company announced a novel battery leasing scheme called Battery as a Service in an effort to increase affordability of its vehicles. The service provides customers the opportunity to lease a battery as opposed to outright purchase it, bringing down the list price of the car. The big news there, or share price mover, isn't the battery business. It's the middle class business. Specifically, the rapidly growing or expanding middle class in China. A middle class that may feel stretched, purchasing a foreign, tax-riddled, premium-priced Tesla, for instance. A middle class that may be inclined to purchase cheaper, homegrown EV products, for example. A middle-class consumer market that is open for competition, ready for the taking for an ambitious company or, let's say, startup. A company, for instance, that just in November raised its guidance. NIO's CEO stated, "Going forward, we remain committed to deploying more resources into the core technology innovations and delivering the best holistic product and service experiences to our community in the pursuit of fortifying our long-term competitiveness in the market." What's a great way to ensure long-term competitiveness? How about securing the largest consumer class within a country, one of the most populous countries in the world, the Chinese middle class? And so, NIO raised its fourth quarter guidance for deliveries to about 17,000 vehicles. What's more, earlier this month, NIO announced a 100 kilowatt hour battery pack that increased the range of its vehicles to over 600 kilometers. I'd say that's long-range driving. And China is a massive country, and a significant portion of its population lives in rural and suburban areas. So who do you think NIO is targeting with long-range vehicles? Based in the US and its middle class that dwells largely in suburban and rural areas, I'd say NIO's announcement is a direct offering to the Chinese middle class. Speaking of offering, we had this announcement hit blogs and news sites recently. The Motley Fool reported, China's best-known electric vehicle company issued a secondary stock offering of 68 million shares, generating about $2.65 billion in proceeds, quote unquote, in view of the growing market demand for our competitive products, which is a nice way of saying that you can actually afford. We are motivated to continuously elevate the production capacity to the next level. And so NIO raised its guidance for deliveries for the fourth quarter. The effect on share price? Mixed to negative. Rational move by retail traders and investors? Probably not. NIO actually has good legitimate uses for the $2.65 billion they generated in the secondary offering. What uses might those be? Here's a direct quote from the CEO during the November earnings call. This is a startup that generated gross profits for the first time just a few months ago. A well-established mega-cap company issuing a secondary stock offering. Sure, that could be cause for concern, but that isn't the case here. NIO explicitly stated it is in the process of accelerating production capacity in December in order to meet increasing order growth, meaning funds raised from the secondary offering will probably go to delivering the product, i.e. generating sales, i.e. claiming market share, i.e. growing the company. The race for autonomous vehicle technology is the race for market share, a slice of the massive consumer pie in China. And the more capital the NIO has, the more likely it is to come up with innovations that will help it keep up or even surpass other EV players like Tesla. So far, NIO has delivered over 36,000 vehicles this year, a 111% increase over last year. And recent figures now suggest that NIO controls about 7.4% of the entire EV market in China. With NIO's goal of delivering about half of its yearly deliveries in a single quarter, the secondary stock offering is more a byproduct of growth than unexpected hiccup. So what's next for NIO? NIO stated it is in the process of accelerating production capacity in order to meet growing order demand in December. The natural catalytic events to follow will likely be the December delivery numbers, which are due the first week of January 2021, and NIO Day, which is scheduled for January 9th, 2021. So what does NIO's stock chart show us leading up to these events? In our next video, part 3 of our NIO stock analysis, we will see what NIO's stock chart predicts will happen with these upcoming NIO events. If you like this video on NIO stock analysis and want to find out more in part 3 of Insider NIO stock analysis, hit the subscribe button now. For in part 3, we will conduct technical analysis of NIO's stock chart, evaluate candlestick reversal patterns, moving averages, RSI, Fibonacci retracements, and more. Alright, I'll see you there, stock traders and tradettes.